gold is the original financial technology. You didn't need a live link into the London metals market or whatever. You didn't need any of that. You just needed a piece of gold.
In our quest to bring you the very best stock ideas here at BBAE, I am going across the pond to my friend Charlie Morris, although this is for a share idea that trades in the US. It is a gold miner. That's all I know right now. And Charlie is going to tell us a bit more. This is probably a riskier than average share, so please be careful. But with risky shares come profit potential. So Charlie Morris, founder of ByteTree, welcome.
Hi, James. Good to be here.
Great to have you, Charlie. And we were just talking before I hit record. You are the closest thing to an all-terrain vehicle for investing in markets that I can think of. You can talk about markets really across the globe, different asset classes, whether that's cryptocurrencies, stocks, commodities, bonds. You really know it all because you have a pretty deep background as an institutional investor. Is that a good way to describe you? Do you like that description of yourself, I should say?
Well, I'm a generalist. And, you get stock-specific people who are equities, sector experts and know all the gold mining stocks. I don't know all the stocks in the world, not at all. But I'm definitely a generalist, and I use quant analysis on stocks to find value situations. So I let the computers do the hard work, then I do my research, and, hey presto, we come out with ideas. So, when I'm recommending a gold stock, it's not that I have a deep understanding of each individual gold company. I found it through quant screening, and then I've kicked the tires, and I said, I like it.
Interesting. Maybe that's a smart way to invest. I do the old school way, but there's certain wisdom in the quantitative methods in terms of statistical tendencies. And I'm a big fan of academic research, and a lot of my friends are academic researchers, and there's a lot of truth to certain statistics they found over the years. So it sounds like you're employing some of that in your methodology. So bringing us to this stock today, the ticker, I believe, in the U.S. market is BTG, and the name is B2 Gold. Interesting name. Can you give us a little bit of the background, A, on what this company does, and B, without giving away your secret sauce, like what are some of those quantitative measures that led you to this company?
Well, it's not that secret because I publish it. But basically, it's valuation metrics. And if you look through what you're getting, how much gold mining you're getting for a market cap in something like B2 Gold with a good balance sheet and good cash generation and that sort of thing, it stacks up. And then you ask the question, why does it trade so much more cheaply than other things? And the answer is obvious once you have looked in. And it's because it has mines in places like Mali in Africa and Namibia and Colombia. And it's got exploration in the Philippines. And then, of course, there's Thailand. So I beg your pardon, not Thailand.
All the places you need a money belt, basically. Yeah.
Yeah. But, I think that what you've got to remember is that these countries are very used to having miners operating on their doorstep. Mm-hmm. They really don't want the instability. There's high security around the facilities. Well guarded, and it's a major source of revenue for the government. And so, they know what happens if you upset the gold mines, then the other guys aren't going to come back. So I think that most of these countries, although you might want to go there, you might not want to take a vacation in these countries. You may well take a different view to mining gold or other natural resources there. So that's how I see it. And it's a measured risk. It's not zero risk, but it's not extremely high either, because it's also diversified. So while a major portion of the company might be exposed to Mali, it's not all the company. There are other things too.
What I like about your answer, Charlie, is that you answer an implicit question that I like to ask about every stock I look at is, what's the market missing? And it sounds like in this case, this is in your view, a well-run gold miner. Gold miners are, of course, going to be leveraged to the price of gold. The market, in your view, is overpricing, over-indexing on the risk of operating in a bunch of these sketchy countries. Your argument is, hey, they're geographically diversified. So the probability that everything blows up in several of them at once is probably pretty low. And B, even these countries know that gold mining is a golden goose for them, pardon the metaphor. And so the odds of some disruption are probably less likely than the market expects. Do I have it right?
I think that's spot on, James. I mean, this thing came to market in 2007. through on the back of a corporate transaction, and basically it's outperformed the gold mining index ever since. I think I'm right in saying in the early days it wasn't a value situation. There again, it was more of an exploration stock back in the day. But as the projects have come on stream, they've kind of delivered, and it can, it's just started to turn up against the sector. And I think it's just, if we see gold breaking out of 2,600, then these stocks are just not going to get left behind. People are going to be going, I'm not paying up for the leaders anymore. I'm going to have a look around the mid caps, and then eventually they get down to exploration. But this is a proper cash flow situation. Another one we own, by the way, is in Egypt, listed in London Sentiment, ticker CEY. And again, there's nothing wrong with Egypt, and you might not want to go on holiday there again, but you could. I mean, there's nice beaches and there are the pyramids, but and the food's good. But to some people, they would find that a scary jurisdiction to invest in gold mining. But actually, the government have had a great relationship with the miner down there for a long period of time. So I do think that to go around the world with natural resources is essential.
What do you say, Charlie, to the person who has read some Jeremy Siegel kind of book, like Value Investing 101, that basically says never touch gold? It just sits there. It's a store of value. It's insurance against all things going to heck, but it's nothing aside from that. Don't invest in gold. Like, A, what do you think about that view? And B, what about let's start with that question first.
Okay, so on my value screens, where, by the way, I'm agnostic. I didn't ask for a gold stock. I just asked for a stock. And another note we put out today, for example, was German specialty pharmaceuticals. Similar criteria to try.
I saw that. Quite a spread you got there. Yeah.
Yeah. So it could be anything really. But in this case, we just found a very cheap gold stock, and unsurprisingly, it was beginning to show a little bit of strength because the gold market was doing well. So yeah, the gold market. What about gold as a long-term investment? Well, in the 21st century, it's ahead of the S&P 500, including dividends, which some people know, other people don't know.
For a quarter of a century, it's basically beat the S&P.
Correct. Now, some people say that's fancy timing. Well, of course it is. But because in the 1980s and 90s, the S&P smashed the gold market. But in the 70s, the gold market smashed the S&P. And then before that, gold price was fixed, so we don't know the answer to the question going back before that. But yeah, there are times when gold's been in front, and that's generally at times of macroeconomic uncertainty. And, we are living through that sort of time now. Gold's a neutral asset, whatever your political views. So, there's a different system going on in Russia today, which doesn't communicate with the system in the Western world today. And gold's a neutral asset that can go between them. There are other neutral assets too. And I think there's a real need for that. And if gold wasn't useful, then the central banks wouldn't own it. And I think there's a really interesting point here. If you don't mind if I digress to gold briefly. Gold is the original financial technology. Because if you went back 200 years and you were in a sailing ship and you went to the other side of the world and you wanted to know what the unit of value was, well, you produced a weight of gold, a weighted measure of gold, and that was accepted everywhere. And you didn't need a live link into the London metals market or whatever. You didn't need any of that. You just needed a piece of gold. And that was accepted everywhere. And then it was the official part of the system until 1970. Then it kind of, it sort of had its inflationary move in the 70s, but then it became irrelevant for 20 or 30 years. And the central banks didn't start in fact, the central banks were selling gold in the 1990s, particularly in Europe. And it wasn't until 2009, after the financial crisis, that the central banks started to accumulate gold. And the best bit, James, is it's not written down on a piece of paper. There was no some conference in a ski resort in the States or anything like that. There was very simply a need for the central banks in the emerging world to have a diversifying asset. And one by one, they started to accumulate gold, and they've just kept going ever since 2009. So there's a real need for an alternative financial system, and especially so since the divisive nature of the war in Ukraine.
Interesting. Gold was Bitcoin before there was Bitcoin, in a sense. Now, if I'm splitting hairs, it sounds like the reason you like this share, this BTG, B2Gold, is is actually valuation first. The fact that it's a gold stock is secondary. But on that gold stock aspect, what if somebody says, well, why should I buy a gold miner versus just physical gold or a gold ETF? Like, do you have a case for that?
It's a very good question. Now, there are kind of three types of gold stocks, let's say. I'm oversimplifying a big subject. You've got the royalty companies, which are first in line to get paid as the gold comes out of the ground. Then you've got the normal miners, and the royalty companies do not get their hands dirty. They've got clean hands like me. They're white-collar workers. And then you've got the gold miners whose hands get very dirty and they're underground and it's a very hard job. And then you've got the exploration companies who are sort of dreaming about what might be in the future. I think their hands are probably quite clean too. And so you've got these sort of three types of miners. And in the first stage, in the gold bear market, the high margin royalty companies are going to outperform everything. They may even outperform the gold price because they're actually a financial kind of company. But let's just call them high margin companies, like software companies, essentially. But then you've got the blue collar, hands dirty gold miners, where the margins are 10%, 20%, or they might even be loss making. But as the gold price rises, those margins come up 30, 40, 50, 60 through that cycle. So they end up having a repricing, which is just phenomenal. And it's much faster than the gold price. So they have a gearing to the gold price, which could be, 2, 3, 4, 5x.
Wow. 3, 4, 5. That's quite a bit of gearing. So this is really gold investing on steroids.
Yeah. So but the cheap ones have that gearing. The highly priced ones don't.
Gotcha. And so B2Gold is on the cheap side and is presumably a more geared stock than most.
Yeah. So
what would make you...
Sorry, just to finish off on that. The junior mining stocks or the exploration stocks with no revenues also have a lot of gearing to the gold price. Yeah. But the problem with them is the emperor has no clothes, there's no cash flow. So with something like B2Gold, you've got the cash flow, you've got the low valuation, you've got a dividend. So if the gold price isn't going up, you get paid to wait. And if it does go up, you should outperform. That is the thesis, right or wrong.
So this is in your view, a well-run, well-managed, financially healthy, yet still small enough company to have that high gearing. It's not so sketchy or shaky that it would disappear too quickly. There's a there basically. With that said, what would make you sell this stock?
Well, I think good performance into a good gold market, or the alternative if things go wrong. And you think, well, the case that we envisaged isn't happening. One of the countries did blow up. All the gold price is starting to fall. For whatever reason, all the presidents and prime ministers around the world and their money people decide to have sound money policies. And suddenly the gold price is not doing so well. Those are the sorts of things. So either we make a lot of money, we sell, or the situation changes and we get out.
Straightforward enough. So I'm looking, Charlie, at the share price now. It's just about $3 in the U.S. markets. Without a specific price target, just roughly speaking, if somebody buys now, what sort of holding period might they want to consider, at least in your thesis, and what sort of upside potential are you looking at?
Can I give the answer, not what I think, but what the market thinks? So the stock analyst, I think it's covered by 11 analysts. Let me just check that quickly.
Oh, wow. This is roughly a $5 billion market cap stock. That's quite a lot.
Yeah, so it's 12 analysts, 10 buys, 2 holds, no sells. And on the latest data, as I speak, the upside's around 50% from the current price. That's just a broker target, and they're not factoring in the fact that the gold price might go up. So you've got 50% just to get to a sort of corporate fair value. If there was a corporate activity or a takeover, you would want to see about 50% higher than current price. And on top of that, there's whatever the gold price can give you, and there's some gearing into that as well. So I think that I'm a gold bull at the moment for obvious reasons with the craziness of the world. And if you think gold's going higher over the next couple of years, then I think this stock can double your money
in a couple of years. And if gold goes lower, then what happens?
Well, I don't think you're going to go down as fast as gold.
Mm-hmm. Mm-hmm.
if gold plummets. Or let me correct that, as fast as the rest of the gold mining sector, rather than the gold price itself.
Got it. Got it. So you have downside, obviously, but you think
Yeah,
you wouldn't be mentioning this if you didn't think the upside was disproportionately good relative to the downside potential.
correct. And that's what we call asymmetry, and that's the holy grail in investing. Lose small, win big.
It is indeed. It is. So B to gold, BTG is the ticker. We'll put that on the screen. A couple of years. It sounds like with gold treading water, the Wall Street analysts see about a 50% upside potential. You think gold's going to go up. So together, combined, this could be a double in 2 years, 3 years, something like that. Is that a good summary?
Absolutely. Absolutely. Which is
Excellent.
very different. I guarantee you it's going to happen, but this is the positive. And the very positive.
Excellent, Charlie. Well, this has been informative. I'm going to go take a deeper look after this call because you got my interest now on this B to gold. I usually don't invest much in this space. I have a little bit of a gold ETF that I just kind of mindlessly bought to have some exposure, but I've traditionally not been a deep gold investor because I do come from that value crowd that says, "Oh, be careful of gold." But the data doesn't lie. You can commit chart crime very easily by looking at a gold chart. Depending on what story you want to tell, you can find the right time period to tell just about any story with gold. But for 24 years, the fact that it's beaten the S&P means something. And so I think I was wrong to ignore gold previously. So I'm going to take a closer look at this BTG stock. So thanks for mentioning this. And guys, if you want to subscribe to this channel, please just click that button. Please like it. We want to bring you more videos like this. Charlie, thank you so much for this idea. Thanks for taking your time. We'll put the link to your website. Any other place you want people to find you on the internet besides ByteTree.com?
ByteTree is also on Substack, BYTE, okay. not with the teeth, and on Twitter I'm at Atlas Pulse.
Atlas Pulse. Okay, we'll put those links on the screen or in the show notes below. So Charlie Morris, founder of ByteTree, thanks for joining us, and thanks to you guys, as always, for watching us at home.